Hey everyone, Tom here. Today we're going to be discussing a topic I get asked all the time, and that is how do we find stock market opportunities? Do you have to spend hundreds or thousands of dollars on expensive stock screeners or scanners? Well, the good news is you certainly don't. There are plenty of free stock scanners and stock screeners that do the same job when you know how to use them. So hopefully this is the last video that you will ever have to watch on stock screeners, and you can use this straight after this tutorial on finviz.com. Stay tuned. So one of the things I like to do as I first come to finviz.com is I quickly have a look at this homepage, and this homepage has a whole bunch of information. Whether you're a beginner, intermediate, or advanced trader, I believe there's quite a lot of information here that you can take advantage of. So one of the first scans that I do is I quickly look at the NASDAQ, the Dow, and the S&P 500, see how they've performed from the day, and I quickly have a look at this sector analysis tool on the right-hand side, which I'll click on in a minute and show everybody. And basically this shows me just a quick highlight of some of the big companies and the sectors that are doing well. So yesterday we saw strength in, of course, the technology sector here. The next thing I'll do is I'll quickly have a look at this left hand and this right hand side. And the reason I do that is because here we have some of the top gainers in stocks. We can quickly scroll through each one, look at the technical analysis on it, look at the breakouts and see whether any of these interest us. If they do interest us, we can see what the signal is showing, the percentage change, and then click on that to bring up further information. On the right hand side, probably my more favorite one is just seeing some of the ones in terms of top losers. I like to always look here because sometimes there's opportunity in something that's doing poorly and it comes back to a support level. So say like this particular company, you can see it was doing quite well. It had a breakout and then it started selling off, and it's been trading in a range before that. Well, there might be opportunity in this stock and we could go look at that. If it's a stock like this one here, where it's in a significant downtrend, we probably don't want to go and look for buying opportunity, but it's something that you can also be looking at. We also have insider selling going on in this particular share, and all of this can be found on the front page. So it's quite helpful for beginner, intermediate, and advanced traders and investors. If we scroll down further, we have all of these kind of like little trend line support, trend line resistance, all of these types of things. The one thing about these automated software technologies for technical analysis and charting is that they don't often work that well. Sometimes they draw a really great channel or they draw a really great trend line. I would not rely on these. Rely on your own analysis and use these just as a screener or a tool. And that goes for most of the technology that you're going to be using today. Underneath that, we have a news tab. If you actually scroll up and click news up here, you'll be given all these blogs and all these news screens with tons of information. Now, would I use this as a trader or investor? I generally suggest you don't use this news because this is usually going to blur your judgment and cloud your ability to kind of see high quality opportunities in the stock market, but it is there for you. And the bigger bit of news that you're wanting to be looking at is earnings releases. Now, we'll be doing a video on earnings releases moving forward. So if you enjoy this video, make sure to subscribe and hit that bell. And we'll be talking about how we look at earnings releases in terms of free resources. But there is some information here, and we can see that yesterday, Bed Bath & Beyond did a report. So all of this information is here, and you can see that very clearly. There's also top insider trading. We have some of the latest kind of insider trading here, and we've got some important economic news for the day ahead. So it's all here on the front page of finviz.com. So the next thing that I do is I always jump into this screener room, and I do this just because let's say I'm not aware of the sectors that are performing well. Well, we know that yesterday was all about the technology stocks. They are the greenest ones, and the red ones, obviously healthcare, didn't look like it performed that well across the board. We can quickly scroll over it, see how all of the big ones have performed. But what I like to do here is I like to quickly look at 1 week, and then I look at 1 month, and I get a bit of a picture here by looking over time at what's performing well. So 3 months, a lot of things are performing well. Look at PayPal. Wow, that's an amazing return there, 81%. But if we go to 1 month, look at what's been happening recently. Well, a lot of the stock market isn't actually performing that well. There's a lot of reds here. But what is clear is Microsoft, Apple, and Amazon, and Google and Facebook, all these large technology companies are doing very well. So if we were looking for breakouts and we were looking for breakout opportunities, I would instantly be saying technology sounds like a good place to be, because that's where all of the market volume is right now. That's where the bullish momentum is. And when you're looking at breakouts, you want bullish momentum. So it's a quick check that you as an investor or trader can do straight away just to find that first kind of bit of sentiment. And I like to do that. You can also see some red bits here, and sometimes that then says, well, should we be looking for potential value in these sectors as well? So you can see here insurance, Berkshire Hathaway, which of course is Warren Buffett's company, has been down a little bit. Is there value there? We can go and do some further analysis soon. So the first thing is, let's say we were looking at Amazon and we said, okay, well, we're going to look at Amazon and potentially see if there's any breakout opportunities. Well, one thing I like to do is I like to quickly search it in FinViz, and it brings up so much information. We get information on return on assets, on return on equity, on return on investment, earnings per share moving forward, earnings per share over the past 5 years. How well has this company been doing? What PE ratio is it? It's all here on this one screen. Another underutilized thing that a lot of traders and investors don't look at is the market capitalization of the actual investment they're trading. If the larger the company you're trading, often the less return, but the more safety net you have. Remember, if something goes wrong and you don't have a stop loss, or you're going to hold that particular share, the larger the company, the more chance it has of coming back and therefore going back above your buy point and you getting your money back. So I like to trade large companies for that reason. I think it's a little bit safer for your portfolio in general, and that's something that you want to think about. When we scroll down, we even have the general expectation of all of the investment bankers. Now, a lot of people would say, well, these guys don't put their money where their mouth is in terms of investment, and often they don't. But what this does is it tells us a bit of a sentiment on the market as a whole. Do the market makers and everybody think it's undervalued or overvalued? What are they saying about Amazon right now? Well, there's been a lot of upgrades recently, because we can see here the June and May upgrading, and they are generally saying that the stock is worth probably potentially more than it's even valued at right now. Now, this means that from a perspective of these investment bankers, it's undervalued. What does that mean in general? Well, a lot of people follow this. A lot of investment bankers recommend to their clients based on these reports. So when these reports come out and upgrades happen, it does mean a big deal to the stocks, and it's something that you want to add into your scanning technology and scanning daily routine. Underneath here, all the news about this particular stock, you can see it all here. Scroll down even further, you even get anything that's going on in terms of insider trading. And this is a great screen when you've made a pick and choice of the potential stock that you're looking at. So here's FinViz's Stock Market Scanner screen, and there's a lot of information to go through here. So I'll just basically go through some of the things that I like to check and the reasons I like to check it. One of the things I automatically do is I like to select mid over 2 billion. And the reason I do that is because I like to trade larger companies in the stock market. I want to usually make sure that that company is worth a decent amount, because that means that there's usually been some due diligence on the stock value. Usually, if a company's been around on the stock market a longer time, that means that lots of people have had a chance to interpret the data and the figures, and there's more chance that that stock will be worth something and still around in 10 years' time. I usually have a 5-year rule, actually. I prefer to trade stocks that have been on the stock market for at least 5 years to make sure that they're clean as it can be when it comes to the figures. We can select all here, and when we select all, it brings up all of the different information. So before we were talking about there may be some breakout in the technology sector. So we can select technology. We have things like analyst recommendations here, whether strong buys, buy or better, hold, all of those things. And while we're not going to pay too much attention to that, they also have a target price. So if we select target price and we say that it's below current target price, even if you're a value investor or you're an investor looking for breakouts, if the stock price is below the target price right now of what they believe, the institutions will be buying the stock, trying to get it to that price, and usually it will gravitate towards there. Remember, the more people that believe that, the more likely something is to occur, and that's really important. So this comes up with all of the large companies, and we've got Apple, Microsoft, Nvidia, a lot of household names still at the top of this list here. And if we scroll over them, you can see all the little charts before you want to click into them. You can just click in and it'll give you all the information. Down on this tab below, we have valuation. We can see all the key figures. We have EPS, we have PE. We can compare them all with each other, which is really nice. We have performance. We can check the performance over the last year. We can performance over the year to date, all of those types of things. Performance for the week, performance for the month. Some pretty nice green figures here in the technology section. We can have a look at the technicals. We can see whether they're above or below the SMA 20s. All of that information's here, and again, it allows us to compare each one of them. Notice how all of these are relatively similar in terms of the percentage. That's because they're all moving in unison, because one might be undervalued, one might be overvalued, and they're pushing all of them together. There's just so much bullish sentiment on the technology sector right now. So all of these little things down the bottom here are really excellent. We can even select charts and compare all the charts to each other, and it will draw all these lines. And sometimes it's worth just coming in here, because you might see something like this, like QCOM is coming up to an all-time high. $95 was previous resistance. Well, it may act as resistance again. Look at that. It's all there in terms of the top charts that we've just set up. So let's actually change one of these now. Let's select earnings per share growth over the past 5 years. Let's select that as positive, because maybe we want to buy companies that have been relatively positive over that time. Notice it's changed down here. Our settings have changed what we're looking at. So this is all the companies. One thing I see automatically is there's an all-time here for INTU. Maybe we want to look at breakout strategies there. Oracle is coming to an all-time high as well. Breakout strategies there. Look at how Apple broke out above that 320 and was very bullish after that point. So this helps us get a bit of a visual picture of what's going on when we're searching. 20 moving average, 50 moving average, 200 moving average, they're all really important. You always usually want to have the stock above the 200 simple moving average. The 200 really dictates pretty much trend. If you have it above the 200, you're always in a bull trend. If it's below the 200, that's when you start to get into bear trend. So if you're looking more for value, you might want to say, okay, is it under the 200 moving average? And then go and see the reasons why. Go and do the further analysis into that stock. So for now, we'll say that we want price to be above the 200 SMA. We can select that just here, price above 200 SMA, and I expect all of these companies to be above the 200 SMA right now. Dividend yield, if we're looking for dividend, we can select that. Maybe we want to have 2% dividend yield. That will knock out a bunch of stocks. And notice how it's bringing it down in terms of the charts. There's not as much opportunity anymore to do with this particular criteria. So that's just a quick check that we can do when it comes to finding maybe a potential breakout. But if we're looking for value, one of the things I saw before is industrials are not doing very well as a whole. So we can leave the market cap over $2 billion. We can say we want earnings per share growth over the past years to be positive. That's fair enough. And then we can also say that we would maybe just leave the price to anywhere in terms of the 200 moving average, because we know it's a beaten down sector, and we want target price to still be below price. Brings up quite a lot of opportunities here in terms of different stocks. Some of these have done really well, some haven't. We can even select insider transactions then, and we can say, well, we want to see, has there been any super positive insider transactions? Well, there has been from these two shares. So we can break that down. That means that people in the company are interested in potentially buying it. We might want to just say, has there been any positives? Well, that brings open more insider transactions here. We can select none, brings even more opportunity. So in normal times when you're looking for breakouts, another thing you might want to do is look at the 52-week high/low. We can select something like 5 or 10% more below the high. So if we select, let's say 5%, we might be able to see some investment strategies where we're close on breakouts. So here we're close on breakouts on the PAYC in terms of all-time highs. We're close on breakouts over here on GRMN, and we can really break down, have a look at that particular stock, and then see whether it gives us an opportunity to get into it. So the power of this software is clear. There's a lot of information you can go through, but that's just some of the things that I will look at. PE right now can be difficult because during a crisis, PE won't make sense. So that's just a quick video on how to use this stock screener and some of the things that you can bring into your stock screener on a daily occurrence. Hopefully that helps. If it did, make sure to subscribe, hit that bell, and we'll see you in the next video. Happy trading, everybody. Bye.